Okay, so I ran into a couple of problems and I fixed them, like how I always do. Okay, so now I just want to go into a very, very strategic way of looking at a typical week. We're looking for a particular structure that's going to structure your entire week. So if this was the high of the day or the high at the close on Friday, I don't like that, right? And it created that consolidation structure in there. Thank you. All right. So essentially, let me just be a little bit selfish and say that I'm considering this structure instead. Okay. And for this, I'm just gonna call it big fat so in my brain, what am I looking for? I'm looking for that very same exact pattern, okay, but on a bigger scale. I'm looking for that very pattern but on a bigger scale. Looking for Alright. So we were speaking about in the previous video how price goes into this consolidation to piss people off. Sometimes it pisses a few off, sometimes it brings back those who had lost before back into the markets and they see opportunity. They see that our price is beneath here, it breaks out, it's a retest, it's going out, it's going, bruh. Holy shit, man, it's not going anywhere. It's just inducing that behavior. Right? It's inducing that behavior. So we get half a Batman. What half a Batman is essentially a W formation where price goes, creates the first leg, and stays in a consolidation. In this case, we got a fair value gap on the minute 15 here, which is good for entries in here on the second leg. I don't like that entry because in a standard account it will blow the shit hell out of you. I'm sorry for the language I'm using, but then that's what will happen. So that's the consolidation. This is a stop and low. That's the first leg of our W. Then price moves into an extended consolidation. Clearly what I have just explained here. This extended consolidation creates the pattern half a Batman. Why is it half a Batman? It's because it looks like half a Batman's head rolled over. That's what Steve said. Let me just put it there, right? That. So if you were to open a smaller time frame, there's this consolidation, stop and low in here, and then price rises again. Consolidation, stop and low, price starts rising. That's why I made the comments in the class that this would be my primary target. Usually on trades like this, the initial high of today, although the initial high was here above, depending on who you are in the world, this could be just the open of the day. I don't know with this broker. I haven't set timestamp on this one. I'm not really following what's happening. So yeah, let me just remove that. So I'm just gonna call the period separator the open and the close. So that's the open right there. That's the opening candle according to the period separator. So it's liquidity sitting right in there. Right? So targets wise, If this is my level 3 down in here, then this is my level 1 back all in here. So I get my V, then I get nice 2 big candles, probably a third, right? Then a fourth and a fifth. So 1, 2, 3, 4, 5, 1 hour and 15 minutes of straight rise. This 1 hour 15 minutes straight rise goes back to the previous daily high, which so happens to be buy side liquidity. Oh wait, I should click on shift. Alright. So typically this is the structure that you need to begin a week. This would be like your bread and butter go-to structure for the week. Why is it your typical bread and butter go-to structure? It's because you know that if this is your Monday, Tuesday, you know that your Wednesday, Thursday, Friday looks like this, and then they move away from the high, and then probably the next Monday they repeat the high and then they drop. So you're in line for like 2 weeks. Okay. So let's go back to the charts. In fact, for this, I'm just going to click done so you know that I wasn't following you or something. Yes, I know what happened here because I traded here. But then I'm just showing you how I approach the market at the particular time. So I'm anticipation and consolidation. It's beginning of the day. Okay. There it is. So we are trading in between these swings here. So in your brain, you should be I'm going to take that as is. Should be looking for this. Annotations, please. Jesus, man. Okay. Common sense. Simple common sense. It's all you're looking for. Liquidity. And in your brain, you always remember the context for which the algorithm began the week. What is the context? The context is a consolidation, then a drop. In this case, this is the consolidation. Excuse me, I need to draw properly. Oh yeah, here we go. You have not because you asked not. This guy was mad at me. Mad about these right. So this language is the language you're looking for as price heads down. Why are you looking for that big candle? It's because your brain should be telling you that after price induces everyone to go shorts, this is your opportunity to go long in the discounts. Brains, baby. Brains. Simple brains. Where is my targets? Previous daily high. Yes, the previous daily high. Dare I say it? I'm going to click done again. So where are your entries on this one? Preferably here, when this candle is one solid red, to the bottom here. And also here, on the close of the candle. However, if this structure comes back down here beneath that low, that trade is absolutely fine. It's finesse. You can start entering here, although you can still go deeper. Lights out, W formation that has formed up quite good. You can also enter here on the close of this candle. But what worries me about these ones is how deep the stop loss is, because the stop loss needs to go beneath here. I don't use the stop loss, so I don't really worry. But for the sake of, I don't know, arguments, just enter on the red candles, like this red candle and this red candle, because your anticipation is upwards delivery. Where to that area there. So this is why you don't need to burn your accounts trying to fill it up with big lot size. You can just trade it with moderate risk. You can also buy in here. I don't advise it because it's the no trade zone. Anything could happen there. It's a 50-50 gamble. But then you can buy. I don't know if I entered buys on that one. Like this one, this move here, up here. I know to be sure that on this day I entered here, and I entered in here actually, and they kind of whooped the crazy shit out of me down here. But I had some positions left on here, here, and here, and I was able to aggregate monster profit and mitigate that loss that occurred in here when I was stopped out. Alright, this is stuff you pray that doesn't happen, but then sometimes it's a blessing in disguise, and let me show you why it is a blessing in disguise. Okay, if this ever happens to you, you took trades, let me say in, you took trades probably on that red candle as I had said, okay, or you took trades on that red candle close as I had insisted. Alright, this trade just got bad. I don't know how you let it go from blue to green, from blue to red that way, but then it happens. It gets the best of us. Look at what is happening to the volumes. The volumes are filling up, and look at that. After this, the market should die out. The market should die out. Okay. How can the market die out from this one? In your brain, you are very much smart brain. You should be having a big moment right now. And you're looking at that low, you're eyeballing that low, and you're like, anyway, price didn't beat that low. What do I mean beat? By beat, I mean this. Hence why I made reference of this candlestick being an area of retracements. Not reversal, retracements. That's why he said that. Yes, that's precisely why I said that. So now, this is going to fill up the volumes. Might be mild. We don't know. We're just going to wait for it to get exhausted. But it should introduce for us our W. Then probably that uptrend that's going to take us above that buy side over there. If the M is the reversal, then the W is going to be the opposite end reversal. Like the structure in here. Nice and clean. This also was also good, by the way, as a trade. It's just that when this happens and you're in this so unfortunate reason that it happens and you didn't close, when price is about to break even, close your trade whilst it's in profit. 9 times out of 10 it is gonna go beneath and it's gonna offer you more trades. If you don't close while it's coming down in here, what you're doing is you're cutting your ammunition short. What will happen to you is opportunity will present again, but you won't have the bullets to fight, or you won't live to see the fight in this case. So from liquidity to liquidity, from liquidity to liquidity. Let's go check this one out. It's beneath. I wouldn't punish you for taking longs in there. I mean, it went beneath the level. For you as a neophyte, put on annotations and charts so you always remember what you were thinking. That's a severe push. That's a very much severe push. But I'm still looking for longs. Doesn't change my analogy. Look at how many candles that move was achieved in 1, 2, 3 big candles. And it came out of a consolidation that was introduced by this liquidity void that brought the retracements. This A top is a consolidation. So my target is that area up there. Alright. Price was a little bit unfair on this day. We didn't get a second leg, but we did get a fair value gap on a smaller time frame, which would have provided us with the criteria to trade long in the correct context. This candle might have made you lose some hope, but for me, it's actually the signal to start looking for buys. It's as big as that one. It invites retracements. It invites for price to come back into it. The algorithm treats it as a gap that needs to be closed. You can also go long in here. I don't advise it though. It's the no trade zone. The best long trades are in here. And I would have taken my long trades on this red candle or on the next one. With the 300 Rand account on a standard account, you wouldn't survive. But sometimes it's necessary that you do it just for the experience, and you know that next time you're going to be able to do it. So now, this is opportunity you can buy in here, guys. Right? Ideally, because of what's happening, it's the second leg, and it closed on a hammer down here. After coming out of what looks like a small consolidation. 1, 2, 3 bars. Alright, so essentially that was the M to begin everything. This is the W to end that downtrend and begin the new uptrend. So for the moment, I'm gonna just step away, and I hope you guys are finding this stuff very, very much educational and insightful. So if this is my level 3 in here, then this is my level 1 coming back up in here to complete this. Think about it. 1, 2, 3, right? So if that's my 3, then this is my 1. Going back into a consolidation. Let me speed it up a little bit. But I'm going to walk away for a moment, and I'm going to let you. So here, I'm going to pause it right there. You got a triple bottom. 1, 2, 3. This can warrant up moves. But guess what? The market condition doesn't permit that. The rules for which I have given you to trade the market condition don't permit that. We just got a consolidation, and now price is trading outside of that consolidation. Why would I ignore that pin? It's because that pin doesn't exist. Look at this. for the visually impaired. Line chart. It's a consolidation right in there. That's where I'll end for now. I'll be back in a couple of moments, maybe like 5 minutes to continue, or 10. Alright, I'm gonna go all the way till load shedding ends. I think that's gonna be 11.